coming to you from literally around the world. This is the first global Crypto Mondays, and I'm going to introduce to you our amazing panel of folks from BCW. We have Dwight here coming from, where are you coming from, Dwight?
Hong Kong.
Okay, Hong Kong. And then we have Che from WorldPay. And you're coming from, let me guess.
Just north of San Francisco.
All righty. And we have Micah from WorldPay coming from?
I'm from New York.
New York. All right. And we have Emma coming from?
London.
London. What time is it in London right now, Emma?
Just went past 1 a.m.
All right, great. Well, this is awesome. I appreciate all of you joining, and I think this is going to be a really interesting, fun conversation. We're talking tonight about bridging the payments gap for exchanges, dealing with fiat on-ramps, growth of payments, and security. And we have an amazing panel. And why don't we just go around the horn and let you all just give a quick introduction about what you do and your role, and then we'll jump right into things. Emma, do you want to kick it off?
Yeah, so my name's Emma Harttley, and I've been on the optimization team at WorldPay for 5 years now. So my team works with merchants from all different sectors who take cards from countries all over the world. And the aim of our team is to maximize your acceptance rates.
All right, so Micah Kershner here, also WorldPay. I'm in business development. I've got 20 years of payments experience. The last 7 years have been with WorldPay, and the last 4 years I've focused all of my efforts in the digital asset space.
Guys, my name's Cabreros. I am based out of San Francisco, have over 20 years of financial services experience, 7 years at WorldPay, and 6 of those 7 years I have spent in the crypto space helping our large global crypto exchanges grow their products and market out to a retail base around the globe.
And I'm Dwight and Diem. I'm a managing partner at BCW Group. We're a boutique strategy consulting firm that touches the intersection of digital payments, digital infrastructure, and DLT protocols. We're partners with various companies, helping them with anything from use cases in their product set to running corporate nodes for companies. Obviously, what brings me to the panel today is obviously our partnership with WorldPay and everything that we do around trying to create frictionless payments for our customers.
Terrific. And since this is an evening, and since we're coming to you from the Bay Area, I want to offer you all a cheers. I have a really beautiful bottle. Last time we had a great wine tasting event, and a colleague of mine who did the wine tasting provided a really cool bottle of this thing called Lyeth, L-Y-E-T-H. It's a very nice fruity red wine, and it's pretty reasonable. So cheers to you all.
And it looks like you're over halfway through, so good on you.
Yeah, exactly. Well, it's left over from last night, man. I'm too old to do a whole bottle by myself. So in any case,
so coffee for me.
Yeah, there we go. And Emma, you've got your bottle of gin over there somewhere, right?
I've got the energy drinks on the go, a cup of coffee.
Okay, great. So payments are complex, and you all do payments all the time with a whole variety of customers. Can you just give us, all the attendees, kind of an overview? What's the big picture, and what's going on in terms of adoption, and how do you all do what you do to enable a broader customer base?
Sure, I'll kick it off. So, you know, when you're looking at payments in the crypto space, especially, there's a lot of things that I think these really sophisticated exchanges tend to overlook, and that's how complex payments are on the traditional side of the business, right? You've got a lot of really smart people that have built really cool platforms with really cool trading tools, and then they go and they look and they bolt on a cheap sort of payment product because they don't think that that's as big of a deal. And when we talk about payments being complex, the reason they're complex in our space isn't because it's a technical marvel, right, that Visa and MasterCard have created. It's because the rules and regulations are about this thick just when it comes to one country. And if you want to be a global provider and you want to offer your services around the globe, then you've got to take that rule book and you've got to multiply it by a whole lot of countries. And that's when things get really complex and you have these exchanges that quickly get in over their head before they've even gotten off the gate. And it's our job to sort of consult and work with these groups to help navigate them through a lot of these complexities and what they might face in every single country that they operate in. That's, you know, primarily a lot of what Emma does and a lot of what Micah and I do, and what we work with BCW on in terms of educating our crypto clients.
I totally agree. I mean, the amount of education that's required in the process is quite a heavy uplift. And whether they're a big exchange or a small one, obviously, as Chase said, as a big exchange, they definitely have issues in the sense that they don't have any payments. But also, from a smaller company perspective, they're looking to add card solutions as well. And on their side, it's probably a little bit of a different situation in the sense that they don't have the resources available to them to do that. So, you know, using services like WorldPay and like the optimization team and people that are within help with that process. It's like,
Yeah, that's sort of where our team comes in. So when merchants go live with us, they'll ask for recommendations or insights into what works best in certain markets, whether that be security features, there might be mandates by schemes or issuers they're not aware of. And that's all the sort of advice that we can give and work alongside our merchants to get the best acceptance in all the markets they operate in.
Yeah, I guess, you know, end of the day, what we're looking to do is to, you know, bridge the gap between fiat and crypto, right? And we see that as, you know, if we want crypto to actually start to look and feel and smell like a transactional currency, we need to have the easy movement into and out of fiat and crypto. You know, it's an easy problem at a high level, but it ends up being a huge amount of nuance to it. You know, once you start looking to Chase point at the rules and regulations, you know, AML concerns and so forth at a global scale, and also doing that with highly sophisticated companies that haven't yet accepted card, right? You know, crypto exchanges really started out being crypto to crypto, and then they started to see that, well, they want to attract fiat or retail customers, and to do that, they need to add the trusted, convenient payment methods that people have, you know, in their pockets, so they can make purchases from the couch. So again, that's what we're trying to solve, and to do that with these exchanges and other ecosystem players that are going to go from never having accepted card to being at large scale in the period of weeks, as opposed to a traditional e-commerce player who's going to have, you know, 10 months, years to scale up and build a payments team and to learn themselves. And the challenge we face here, Emma is so helpful with, is teaching merchants to work at scale in a very, very short period of time.
Awesome. Awesome. So when you all are talking about, you know, your work with the top crypto exchanges, what are, you know, you mentioned that you're dealing with really smart people. They're used to crypto. What sort of surprises do they run into when they're now talking about onboarding fiat and getting a couple of guys in a bar or sitting around saying, I want to buy a few $100 of Bitcoin and I want to do that, but it's really hard for me to run that on my Visa and buy some stuff on Binance, on Kraken or wherever. How do you what sort of issues do you run into with the exchanges, and how do you help them make that process easier for the consumer?
Sure. I'll start with this one. So, when you look at cards as a fiat on-ramp for crypto exchanges, you've got to understand what type of consumer that is compared to what they're used to, right? So most of these exchanges probably have institutional traders or active traders, and also, just people who like the space and want to partake in it. So, those type of folks don't have a problem jumping through the hoops that it takes to make a purchase, right? But when you're talking about a card purchase for crypto, you're talking about a retail consumer who's going to spend $200 or less on a digital asset, right? And to your point, Mark, they may be at the bar shooting the breeze. Someone brings up Bitcoin, all of a sudden they want to hop in. And what a lot of these exchanges, which you have to spend a lot of time working with, whether they're large or small, to Dewey's point, is you have to explain that you're thinking and having to appeal to a retail person. And a retail person wants a nice frictionless experience. They want to be able to go in and see really big, easy selections, right? For example, if you're on Amazon, you put a bunch of stuff in your basket and you can do a one click and you buy and you're done. Or if you're on Uber, you select a ride and then you spend your time watching the little car drive around until it gets to you, right? But when you make a customer have to jump through 5, 10, 15 hoops to make a $100, $200 purchase, more likely they're going to just abandon that experience, that shopping cart, and they're going to go to another player that's easier to get on board. So teaching these exchanges to think like a retail consumer, and that type of an experience that you want to provide for a retail consumer, it's a different way of thinking, and it requires not only knowledge in retail space, but it also requires a really hefty knowledge in traditional payments, which is usually something they do not have.
Yeah, I mean, just to add on to that as well, I mean, like, definitely in the retail space, the purchase is more on the impulse purchase, like alluding to. And so, like, if you've got someone who wants to make that impulse purchase, but then you've got this like 2-3 day, sometimes even more, with the ability to like go through wiring money onto an exchange and all the rest of the things that are going on, it's not the ideal situation for what you're actually looking for from the retail side of things.
Yeah, and we've gotten a lot of comments already, ahead of the event. I see one here in the chat where someone was just saying, "Well, I had a problem with Simplex. I was trying to get onto that exchange, and that didn't really work out." I think it's
Common theme.
I'm sorry.
That's a common theme.
Yeah, I think it's a long way to say I'm going to reload my Starbucks card or put more money in my Uber account or pay for my Airbnb with a Visa or MasterCard than it is to throw some money up on an exchange. And is the U.S. still blocking credit cards?
Most of the major issuers in the U.S. are still blocking credit cards today, but debit cards are still available because it's viewed as a cash transaction, as opposed to credit is often viewed as being margin trading.
Right.
So
Which is
best
interesting.
practice for acceptance in the U.S. is debit only at this time.
Yeah, and that's interesting considering some of these exchanges have 100x margin and that sort of thing, and traditional stock exchanges are super liberal, with margin lending, and all that sort of thing. What is the state of the market today? If you all were to look at it and try and put on your consumer perspective on a scale of 1 to 10, 1 being impossible, 10 being like super easy, how would you all rate the availability of making payments happen through exchanges today?
I mean, that's going to depend on the exchange, right? Again, if exchanges are thinking like a retail player and looking at retail consumers, then the ones that have created a much more like frictionless payment experience is probably going to get the customers their way. When you have when you have an exchange that you've got to go through 14 different hoops just to get your card attached, and then this exchange is using a poor solution like one that you might have just mentioned, where there's like a 30% acceptance rate. Now you've jumped through 14 hoops to get your card attached, and you've got a 30% chance of actually being able to make the purchase. That is just a really, really poor experience, right, for a retail consumer. And so the ones that create that easy to use, easy to understand, hey, I'm looking at these digital assets and they've got things popping up to give you more education. But more importantly, they've got a nice big button somewhere that's connected, and a customer can make that purchase and not be rerouted to some other payments provider platform that they weren't expecting to jump to. You get a lot of traffic driven that way. And as soon as, the more that exchanges understand that that's the type of consumer you're dealing with when it comes to a card, then it really does come down to how you create that experience on your site.
I definitely think that it's better than in sort of like 2018, but I would say to add on to Chase's point as well, a lot of what you see with some of the exchanges is they're also creating competitive marketplaces of card on-ramp products. And so what you now have is a consumer with way too many choices sitting in front of them. So they've gone from not so much understanding how it works to learning it a little bit to then being presented with like 8 different options. Which option's the best option to go with? And so, integrating something like WorldPay, where it's like this single integration with very good pricing across all markets, means that you're not causing more of an inhibited experience for your consumer by putting this marketplace on there. Sorry, Micah.
I think we're probably at a 2 or 3 as an industry today in the crypto space in terms of that experience. All the major players are laser focused on improving that. They're adding on, direct acquiring capabilities, and they're making strategic hires. And they understand that the checkout process needs to be an easy one. It needs to be one where the conversions happen, and starting to learn lessons from retail. That's really the experience you need to start to look at, is the retail checkout flow, and establishing benchmarks and improving against that. And that, I guess, Emma, you can talk to that.
Yeah, so that's something that we do on my team. We not only look at your authorization data, but we'll look at the user experience as well. So we'll try and go on your payment page and make a purchase, or try to, and just check out the user experience. So mainly around entering your card details. So we will look at how many clicks it'll take to get to the actual payment page to put in the details. But then once you get there, how easy is it for the cardholders to make a mistake? Are you allowing sort of letters to be entered into the card number field, and simple things like that, which are just frustrating for cardholders? You might have went through all the checks and you get to the final step, and you just want to make it as hard as possible for them to make a mistake and get an unnecessary decline for you guys. And I suppose another thing is, with the sort of credit cards being blocked in sort of the US and the UK, can you work with your cardholders a bit to educate them? So if they are entering a credit card that is blocked, can you sort of pop up a message to them and advise them of that, and recommend that they use a different card or an alternative payment method? So all about maybe educating your cardholders a bit more. Like Chase said, they're sort of resale cardholders, maybe new to crypto space and not aware of the restrictions on payments in the crypto space.
In terms of best practices, what we're not seeing today is the best retailers, the best global retailers. If you go into subscription models like Netflix or Hulu, what have you, they're going to customize their checkout experience to the market, right? And they're going to customize that in terms of language, but also where the buttons are, the look and the feel. They're going to localize the currency so that you're able to pay in your local currency. That you're going to have the local trusted, convenient payment methods. If you're in in Asia having like China Union Pay available, things like that. All those things work to maximize the rate of which you turn shoppers into buyers. And we're really not seeing that yet. I think it's something we're certainly evangelizing it, but I think we're still, some time out from seeing that applied in practice at scale.
Yes, I mean, you all were also mentioning the importance of consumer adoption, and I think one of you mentioned how one of the exchanges went from a zero retail base in the early stages, because everyone was professional traders, to about 25% now, and that the retail base is incredibly important for the net new growth for larger exchanges. Can you all talk to that a little bit, and if you can give any examples, if it's named or unnamed, about a larger exchange that had seen success by enabling more consumer participation via payments on cards and that sort of thing?
Well, they're all looking to make money.
Yeah.
And retail is where the margins are. So those are the keys to the kingdom.
I think the big thing is if an exchange does this right, and they do cater this towards a consumer experience, then what they do find is not only do they get that uptick in new revenue, right, that comes from these retail investors, but that revenue tends to stay. So you tend to have these customers that will stay, first of all, they'll stay loyal for the most part to an exchange if the experience is good, because the hoops you got to jump through every time you want to join an exchange is a big pain in the ass. When you're uploading your passport and your driver's license, and you're taking pictures with your card and covering digits on the card number itself. So if you create a good experience and you do get this, and you do get these customers, then you've got a loyal base that now you can start also marketing and selling other type of products that you have to these customers, whether it's custody solutions or investment advice or whatever else that you might have on your platform. You actually have an audience that will pay attention to that. But if you don't do it right, what you find that you end up getting is you get a lot of customers that end up calling your ops supports queue, and they start complaining, hey, I have a good card, I try to make a purchase, it rejected 7 times in the middle of a uptick, and I missed out on Bitcoin BTC moving by 10%, and it's because your system couldn't process my payment. And all of a sudden you're getting a large swath of customers that are complaining, and you found, oh my God, you don't actually have a support staff that can answer those questions, because you haven't really thought about payments that way. So it could be a very good thing to have, or it could be a very, very bad thing if you're not prepared for it.
Yeah, I mean, I think as well that it's a super important transition phase to sort of start to bring in the retail base and have them understand and get comfortable with this whole thing. At the moment, we spend the bulk of our time focused on exchanges and wallets and all of these points, but it's still very much mostly the speculation side of the market. And blockchain and tokenization in general has a massive use case outside of this, and so it's very important to sort of move through this phase from speculation through to utilization, because a few years from now, we're going to end up in situations where a lot of different sort of protocol layers are using, say, micropayments in the back end for apps, whether it's some sort of pay-per-view reading magazine. So if you were to try and get the underlying token that you need to do that, at the moment, it's an extremely difficult process. You don't want to have to sign up onto an exchange to buy a token to use an app. Especially your mother or your grandmother's definitely not going to do that. So, the ability to have these, traditional e-commerce move into crypto commerce type aspects of it is super important.
Very
Absolutely.
interesting. Yeah, so are you all, is micropayments a thing yet? Are people using cards to go buy small things, or is that just not what the use case is
Oh,
right
they will. It's not there yet, but they will. You know, like, you know, Visa, MasterCard, you know, transaction costs, with be it on credit or debit, are still, you know, prohibitively high for the micro ticket market, right? You know, you can't go and merchant would be underwater if you bought something for a penny with a card, for example, right? But there are use cases. There are use cases for that, you know, in gaming or online gaming. If you have transaction costs low enough, well, you can, you know, pay for a bullet or whatever on your favorite game, or, you know, some basketball shoes, or whatever you need. And I think that's coming down the pipe. You know, with these, you know, different blockchain protocols that we're working with. We hope that that's something that will be monetized, you know, in the years ahead. You know, to that end, we're staying very close, you know, to the companies that are in a position to do that. You know, Che and I sit on the Hedera Governance Council, and it was just announced, I saw the press release came through while we were online here, is that FIS has also joined the Clayton Blockchain Governance Council, which is part of the Cacao Group out of Korea. So there will be very exciting developments there in the years to come. But, you know, we're kind of in the infrastructure building stage. And think about, you know, we're in the internet stages in the mid-90s right
now? What happens if you all have an idea and you think this would be great for exchange, this would be great for crypto, this would be great for consumers, but the big card issuers are kind of like, nah, we don't get it. Nah, we want to get our fixed percent, our fixed per transaction cost still, and percent on the back end. Have you had experiences where you've come to a Visa or MasterCard and said, hey, we really have to consider a new business model? Have they been open to that? So I guess the question is, who's driving innovation forward? Is that a company like WorldPay, or you have to sit in the back seat and wait for Visa and MasterCard to change the rules, or do you do that collaboratively?
No, I think that's a collaborative effort, right? You know, exchanges and other crypto clients will tell us what they want. And again, this is when it comes down to the type of provider you pick, right? We are the largest in the world. So, you know, we do about 75 billion transactions, you know, debit card, which is roughly about 9 trillion, I think that was last year. So we have a lot of influence in terms of being able to let, you know, to voice our concerns for our customers with Visa and MasterCard. You know, those discussions, obviously we can't, you know, talk about what we say, but we will advocate, and we do that on an executive level. It's not, you know, mid-tier talking to mid-tier. You know, so a lot of this innovation and what we're pushing for, you know, you're talking about the old traditional markets trying to move, which is very slow, to an exchange that's, you know, into a space that's going really, really fast. So finding that happy medium in the interim is a lot of what, you know, we'll spend a lot of our time doing, because there's always workarounds and fixes we can do as the market starts to mature and we're looking for better products out there. Because we've been doing this for 7 years, so it really does make a big difference when it comes to knowing where the obstacles and pitfalls are in traditional fiat on-ramps.
And I would say as well, like a lot of their concerns are being dealt with by multiple angles. So you can think about, you know, obviously this whole industry is still in growth phase. Everything's still being developed. You know, a lot of the problems that they have are, you know, let's say on the hacking side, you look at like the last 2 years, the amount of custody-based solutions that have come out that are like helping these companies really store these assets is obviously something that Visa and MasterCard would be looking at to make sure they're happy. It's something that WorldPay would be looking at. It is something that we do look at when we onboard customers, like what are all those safeguards that they have on the security side of it. I mean, also things like the fact, So the Financial Action Task Force put out a global guidance about a year ago that some jurisdictions are now implementing. Singapore is requiring it in order to get the license. There's some form of it similar in the US at the moment, and other countries are putting it in as well. And what this is doing is it's allowing basically sender and receiver information to be sent alongside the Bitcoin or whatever digital asset you're purchasing. So think about a scenario at the moment or a few years ago where someone could sort of basically try and steal some of this money and then send it anywhere completely anonymously. So these regulations that are coming in are obviously making that harder to do. We're a big believer in that and what's happening. We've recently partnered with a company called Shift, who's in the space, who, you know, very much doing it from a point of view of like mixing between what the idealists want and sort of what the regulation wants. And so, you know, Visa, MasterCard, and WorldPay is seeing that like this ultimate sender receiver information needs to be sent as well. Then obviously they're going to be more comfortable knowing that this information is available if needed.
And I think we're going to see the card brands, you know, Visa and MasterCard, developing their own products on top of this. You know, if it's, you know, from take, for example, like trade finance, which would be a space that Visa and MasterCard aren't traditionally in today. But it's a wonderful use case because it's trade finance is tremendously complex. And when you cross a border, duties need to be paid, right? And at different times, different vendors need to be paid as the trade moves across the globe. And using the blockchain to do that, using a smart contract with the irrevocable ledger and automatically triggering payments, and then having that recorded there, so that if when there's an audit, boom, you have it all right on the blockchain. Again, in spaces where the card brands and traditionally been able to see any revenue on those types of financial transactions. So there's going to be a lot of use cases that they're going to pop up, and I think ultimately, Visa and MasterCard are going to come out ahead and find ways to make money with all of this.
So, do people come to you all and say, "Hey, you know what? I'm holding a whole bunch of stuff in my wallet, and I want to pay with a stable coin, and I don't want to go exchange to exchange. Can I do that with a card? Like, are there any can cards do anything more than just take money, fiat out of your bank account and send it somewhere else? Do cards have a role to play with all these different digital assets and stable coins out there?"
I mean, I would say that, again, when you're talking about what cards are really good for in this space is, to me, it's really driving that adoption, right? If you want people to partake and use a particular stable coin or use a utility coin of some sort, or even, some of the big name digital assets that are out there, Ether or BTC, etc. You got to get customers used to talking that language and using it and touching it. And the thing is you find that really what that card does is it's their personal entrance into a space that they've never been in before. And if you can get them to pull that card out and make a small purchase and experiment, what you find is that a lot of those folks don't go away. They'll continue to make purchases, maybe small ones. Eventually they may actually, wire funds, larger amounts of funds in to do some more active trading. But for the most part, you've created adoption and people talking about it and not being scared of the technology. And it's by pulling out something that's, created way before the internet, right? And so it is, to your point, Mark, it is in a sense moving money from one place to another. But I mean, that's in a lot of ways what we're doing with all of the other digital currencies. This is a way to drive adoption. And if you want adoption onto your platform, you've got to make it usable and friendly and something that actually attracts a customer to do it.
One of the big use cases I think we're seeing now is it's not so much peer-to-peer using the card, but for cross-border remittances. And the great example is, in Hong Kong. Hong Kong has something along the lines of 750,000 Filipino foreign workers. And the adoption of crypto is very high with them for remittances back home. And so, would you purchase a highly volatile crypto asset, an altcoin, Bitcoin? Well, you probably go for a stable coin to ensure the value is getting home. And we're seeing a number of players, actually FIS does have a number of customers when we process for on the issuing side that are have crypto-based cards, right? And so the exchange, what have you, and some Coinbase and Binance have programs where you can hold your crypto assets in a wallet, and then when you go to a brick and mortar retailer or you go to an ATM, it's a prepaid debit card, and so you're able to withdraw to fiat currency spot, and that's just, again, it's a great use case for cross-border remittances, and something I think 1 year, 2 years from now we're going to see much more prevalent.
So, Emma, maybe you can talk a little bit about situations that you all have run into when you're collaborating between WorldPay and BCW on helping a customer kind of come up with best practices. What sort of interesting stories have you run into, and what have you helped customers do better?
Yeah, so I think the main thing to talk about from an optimization perspective is when we first start to look at the crypto merchants once they've went live with us, we really focus on the fraud and chargeback rates. So we touched on it earlier. There's a direct correlation between fraud and chargeback rates and decline rates. So the higher they are, the higher your decline rates will be. So the average crypto merchant that we see has a decline rate between sort of 30 and 50%. And as long as your fraud and chargeback levels are high,
30 to 50%, is that what you said?
Yeah, decline rate.
Wow.
So it can be super high, yeah, and that varies by market. Again, obviously some are a bit lower, some are a bit higher. So really the basis of it is getting the fundamentals right. So make sure that you have a robust fraud tool in place first before you start accepting card payments, because it's all about the relationship that you have with the issuer. They're already going to be a bit cautious of merchants on this MCC, classed as sort of high risk. So you don't want to give them another reason to decline more heavily. So that's one thing that we look at. And then we look at the security features that the merchants are using. So CB2, ABS, 3DS. One thing that we get asked for quite a bit from the crypto merchants is 3DS acceptance rates by market. So we've provided that to a few of our merchants. Again, that does vary by market. 3DS has the added benefit of shifting the chargeback liability to the issuer. So if you use 3DS to authenticate a payment and it's charged back for a fraudulent reason, the issuer will actually take on the liability of that chargeback. So that can help not only with acceptance, but also against fraud as well. So when a merchant goes live with us after about 2 or 3 weeks, we can provide a sort of analysis into their payments, look at what they're doing compared to the benchmark as well. So other merchants in the same space. So that's a role that we play.
Yeah, and I would say, just to add on to that, and what Emma and her team does is super important, because to Chay's point at the start, you've got these companies that have gone from not accepting payments at all to suddenly being like a sophisticated global player. It's not like they've moved through phases and, you know, maybe just they've got a local shop and they're starting with payments locally and then sort of expanding it to nationwide and then going international. It's straight from zero to all in. And, you know, without a team like Emma's team to sort of help the customers along that process, a lot of them end up getting in trouble.
Wow. So 30 to 50% decline does that happen just once and then you go back and they accept it, or then that transaction's dead in the water and you have to go figure out a different way to do it?
It depends. So it depends what it declined for. So another thing we look at rather is the reasons that the issuer declined for. So for anybody who's currently accepting cards, you'll know do not honor is a really unhelpful decline reason, and we see that the most, but it could be insufficient funds and the cardholder tries again and it goes through. However, we could be seeing that in a particular market, there's a lot of declines for invalid transaction perhaps, and it might be coming from one issuer on one card type. So we can then advise the merchant of that and how best to sort of handle it. So it doesn't mean that it's lost, and it doesn't mean that that's the level that you're going to stay at. So the longer you process, if you can maintain low fraud and chargeback levels, you're deploying the correct security features for your business model, but also for the markets you operate in, then you should see acceptance steady out and decline over time.
And you know,
as well. So go, Chair.
Sure. Just one thing, and you know, the tools that Emma gets besides, you know, the analysis and things that her and her team have developed, you know, you're also talking about, as I mentioned before, you know, when you process 75 billion transactions a year, you get a lot of data intelligence from that, right? And you can start to look at what type of parameters and things that the actual card issuer might be concerned about, you know, what things that you can do to these transactions to make them, you know, go through the process and not cause concern for the card issuer. That comes with a lot of knowledge, comes with a lot of data mining and analytics. And I think that, you know, having those type of tools are important because, you know, if you go outside of WorldPay, you know, I won't quote any other competitors by name, but I can tell you that the average acceptance rate, you know, again, is around 30% when you're going to some of these other providers. And so again, you know, is that 30% of potential uplift worth the 70% of headache you're probably going to get from a bunch of consumers that are not happy with what you're doing? And you know, oftentimes we find that high of a decline rate actually does cause a lot of more headaches than it does anything else. So you end up having to, in a lot of ways, take a lot of these exchanges and retrain them on how to think through these things so that they can create that experience again.
Yeah, and I would say as well, like there's a very high chance for a loss of customer. The average sort of crypto user has 2 to 3 exchange accounts. And so if they're on one exchange and get a bad experience through a decline or whatever, they're just going to go straight to the next one and try. And if they get a much better experience, it works well, and everything's working, then obviously you know where they're going back next time. So if you want to, you know, maximize your customer retention, it's very important that you maintain and have the best customer experience through that process.
That's right. You just have to think about the high cost of declines. Exchanges spend, and anybody who's selling online spends a lot of money in order to get a user into a spot where they actually want to make a purchase and they're clicking buy, right? And we know from 40 billion transactions of experience, well, if a user gets a decline, you know, the 73% chance that they are not going to attempt another card, and you've lost that sale, right? So our job, our solemn oath, and along with Emma here, is to ensure that number is absolutely maximized. Because really, when it comes out to acquiring, it's not about competing on price. It's competing on the top line and how much money you're able to get in the door, and everything on that has to do with approvals.
I see. Very interesting. Very interesting. So we just threw up a poll asking everyone if you've attempted a card to purchase crypto. So we'd love your response of yes or no. And then also, did the transaction go through on the first attempt? Yes or no? So I mean, I remember from my early days of the internet with card not present transactions that the cost was higher, and the cost was even higher when you talked about high risk sort of things like e-commerce. Used to be really high, and I think even certain online services are a lot higher than other because of the risk and the fraud and the chargeback. Is that the same situation today in crypto? Or are exchanges or merchants who take crypto exposed to much higher fees because of the perceived risk?
Well, it is a high risk space. It's not perceived risk, it's real, right? When an exchange decides to accept card, and exchanges in general are, one of the biggest targets of hacking out there, because they've got, hot wallets that they need online in order to go about their business. And depending on the size of the exchange, you're talking about a trove of, many millions of dollars, if they're successfully able to make that hack. Users that, if you're online, you're making purchases online, there's an industry out there who's, attempting to steal your card information in order to make purchases. Is there a risk premium in crypto? Is there a risk premium in making purchases online relative to a card swipe transaction? Yes, there is. It has to do with the burden of chargeback, a fraud-based chargeback in an e-commerce environment sits with the merchant, right? And with that, the merchant acquirer, which in this instance would be WorldPay. And if you flip that around, where you're going to Walmart or CVS or Marks and Spencer's, and you have your card in hand, you're able to put that chip into the card reader, and are able to do a live user authentication, perhaps with the PIN. The burden, the liability on a fraud chargeback is on the issuer. So that naturally has a lower effect on, or a downward effect on pricing for the card present merchant.
Yeah, I mean, from our experience of when we talk to a lot of our clients about sort of integrating cards, I think one of the biggest things through that education process is that a lot of people don't realize that a lot of these big e-commerce companies actually have full teams that look after the payment process. A lot of people just think that maybe there's insurance in place and that it's something that's covered by Visa and MasterCard. It's not something that they as an e-commerce merchant need to stand up a full team to work through. And so, to talk about some of the stuff that the WorldPay guys do as well, is obviously they have a lot of these tool sets so they can sort of augment your own internal team that probably doesn't exist at this point as you're ramping up. Maybe you've got one or two people in it, and so they then have all of the tools available for you to help you manage that process as if you were a larger e-commerce site.
Yeah, I did a review for a merchant not too long ago, and it was exactly that. They'd been processing with us for a few months, but they didn't have a team to look at chargebacks or anything like that. They were actually interviewing that day. So the deck that we gave them and the insights that we gave them was really, they found it really helpful, and could use that to then start to build out the team and, teach them what to focus on, I suppose.
Okay. And what happens if someone buys crypto? Can a merchant do a chargeback on that and get that reversed when you've already delivered another asset? Or how does that work? Is it the same way as it is in retail? And is there a correlation between the size of a purchase, larger versus smaller?
So first, it's customers that do chargebacks, right? Not acquirers. We'll process, through the rails for a chargeback, but it's a customer who makes a call to their card issuing bank and they say, I don't recognize this transaction, or, you know, it wasn't executed to my satisfaction. I tried to work with this merchant and they won't refund me. I want to charge this back. And so chargebacks do become a very expensive proposition sometimes for these exchanges if they're not prepared for it, right? But really, you know, what a lot of the tips and things that we've learned along the way, and you'll probably see them in practice with certain exchanges that you guys out there are familiar with, you may find that when, you know, you make a purchase on an exchange that has a good payments platform put in place, the experience goes through and they'll know right away if if the transaction went through, and they're allowed to trade that digital asset on the platform, but they're not allowed to withdraw it yet, right? That's what a lot of smart exchanges will do. Maybe they'll let you trade it for 5-6 days, and then once money has cleared and customer, you know, hasn't come back and issued a chargeback, because usually those happen within the first few days of a transaction, usually, you know, right at the beginning of a transaction if they're a fraudster, then they can release that asset to a customer for withdrawal or to transfer to another wallet. But these are things that you don't find out unless you've been bitten yourself, or you're working with someone that can guide you past those things. And a lot of times it's the exchange got bit, and they, you know, their name's blowing up in Reddit for all the wrong reasons, because, you know, they've got a huge fraud problem or something like that, which is not something a digital asset exchange wants to be known for, right?
Worst case scenario as well is you can then be blacklisted by Visa and MasterCard which is obviously then an even bigger issue, because you can't really go somewhere else to another acquirer, because obviously it's still Visa and MasterCard in the back end. It's very important that you take it seriously and control it.
Yeah, fraud is a dynamic beast. You know, you can't put just one blanket rule in place this month and hope that it lasts you in the future. You constantly need to be sharpening your sword there. Again, these are very organized rings that are committing fraud around the globe with respect to crypto and with respect to payments. You do need, you know, the team to be looking at this constantly and honing the different, or countering the different fraud vectors that you're seeing in different markets. Different markets all have unique fraud challenges.
So what are acquirers doing to innovate and accommodate acceptance of various cryptos and making it easy for consumers to use whatever crypto they have to buy whatever they want?
Honestly, not enough.
Because I mean, I know a guy who runs a company called Coin Payments, and they go around and they give people just basically a link. If you have Dogecoin, you can use it to buy, you know, something on that site, and then the retailer has, or the merchant has basically a wallet, and they can either keep it and do what they want, or let it appreciate, or they can exchange it. Is that a model that you all are looking at, or is that kind of adjacent to what you all do?
Certainly looking at it, and I hope we get there, and we get there sooner. There is not a huge amount of demand for it, to be honest, in the enterprise space for crypto acceptance, but it's going to depend on the market. In the United States, you know, crypto is seen as property, not currency, and so if every time you want to make a purchase, it's a taxable event, and you have to talk to your accountant about it. Well, that's kind of a problem, and that creates a hindrance to it being used as a currency. So, you know, there's some regulatory stuff that needs to be put in place in order to be used as a method of transaction. And, you know, particularly at the low transaction levels, right? You know, you can have a taxable event if it's on a very high ticket item, but it doesn't work very well for daily spend as it sits today.
Okay. I mean, there was a recent policy clarification that allows national banks to be custodians of digital assets and keys. So does that change anything in the macro payment processing world for you all?
I mean, it's good to see because it obviously lends credibility to the sector, right? And when you have big banks that are willing to hop in, like JP Morgan did, et cetera, I think, again, the the more adoption that this space gets, then the more the products, that are traditionally, that something that's been offered to exchange or to merchants that are not in the crypto space could now be developed and offered in the crypto space, right? It's baby steps, but again, I think one of the advantages of working with a really big player like WorldPay is that if there is going to be a change or a new adoption, or they're going to allow us to use, various digital assets as payment methods, then we'll be the first to get to pilot and use something like that and see where the adoption is, right? Because we also have a huge portfolio of other non-crypto clients, right, in various verticals, and they all want to partake in blockchain in one way or another. So there is a lot of, cross-functional synergies there that need to be teased out, but it comes first with the adoption, and that still goes back to making it easy for people to say, hey, let's explore this space. I've got something in my wallet that can be used to make one of these purchases now. You make it very easy for them to do it. They get a very positive experience. They tell everyone how brilliant they are because they're in crypto or whatever. And now, you get use cases outside of just speculation, which, was to Dwight's point earlier. Right now, there's still a lot of speculating, but the use case comes with adoption. And step one is make it very stupid easy, and, you'll get people to explore it.
And, I think the first coins that we will see that are starting to, or will be used as transactional currencies are going to be the stable coins. If you're selling them for the same price you bought them for, it is not a taxable event, right? But payments acceptance is a two-sided market. One is you have to have the businesses that are accepting that payment method from their customers. The other side is the customers, not dissimilar to card acceptance, credit and debit. When you use a credit and debit card, there's value there to the consumer because they do have chargeback rights. You go in and you make a purchase and you purchase a TV, and they deliver an iPod. Well, hey, that's a problem. You call up the store, attempt to make a refund, they don't want to give it to you. Then you call your bank, and that charge, there's insurance that's provided there to the users. They might also, in the U.S. in particular, we've got premium cards that provide benefits like miles and things like that just for spending. So someone is going to have to come up and create a value proposition that's good for consumers to use the digital asset as a transactional currency.
Yeah, we've whiteboarded this scenario with a few of our clients, and it's very much a case of like you can speed up that payment side of it as quick as you want, but obviously if it's a physical good being delivered, that's always going to be as slow as the courier delivering it. But what we can do, to Micah's point, is optimize the back end in the sense of take the amount of digital money that's been used to pay for it, put it into a smart contract. That acts as the escrow service so that when the goods are delivered, and the smart contract releases the funds to the outside. There's certain ways that you can still put that type of thing in place and still create efficiency and cost savings.
Yeah, I will say I'm very excited about our partnership and joining the Clayton Blockchain Governance Council. Clayton is part of the Cacao group, the Cacao app in in Korea has, something along the lines of 98% market share. They've got an entire ecosystem in there, big with gamers. And the recently launched Play Token is going to be used very heavily within those gaming ecosystems for buying resources, games, and things like that. And I think that might be one of the first wide-scale rollouts of using crypto as a currency.
Yeah, I'm a huge believer in gaming and NFTs and all that as it relates to value-adding crypto. Do you see that, Micah, in such a way that people will be hitting their card to buy, micro transactions, or will they just top up, for $25, $50, and then just have that in their wallet and they go off?
Yeah, it's going to be the top-up model, just because if you're having Visa, MasterCard, or other payment methods behind, there are more fees associated with than the micro ticket in most cases. So we will see users buying increments, and then they'll just be debiting those coins from there as they use them.
So when you all come in, you're almost like kind of a consulting SWAT team in a way, right? Dwight and Shay and Micah and Emma coming in and sharing best practices with a provider or a merchant on how to not do stupid stuff and how to do stuff better. Do you think that's kind of fair?
No, very much so. I think a lot of what we do is you're educating a group that's already very intelligent, but you're trying to go over a new fiat on-ramp for them that they don't understand. Once they open their eyes and see how complex it is, especially when you're going from country to country and the rules and the regulations are different, depending on what the government of that country has decided to impose, not only on cards, but also on the way you purchase crypto assets there. Being on top of what that latest news looks like, being able to advise a client on where they should open up entities around the globe so that they could take advantage of good regulation, places where we know that markets are really heavy in the space they're in, and then also leveraging our global licenses around the world. You do a lot of consulting, and I think Emma probably does the most, because we just sell you, bring you in, and then she has to come in and do the heavy lifting, and that takes a team. There's so many people that work behind the scenes to maximize these exchanges, acceptance rates. That's different than anywhere else, because other competitors are still using software and just trying to send you the links to fix things. But you really do need that consulting if you're going to really be able to play in the global space. Locally, hey, it's up to you. But if you want to be global, there's a lot of work to put in. And do you want to be a global payments person, or do you want to manage your business and have a team behind you that's actually worried about payments? And that's where we come in.
Yeah, I mean, like, a lot of the very early conversation is like understanding of what the product is that the customer has, where they're looking to go, and sort of trying to find the right product market fit for that. Because, sometimes going direct to WorldPay might not actually be the ideal solution. Maybe you don't want to stand up a payments team. Maybe you don't have the volume push at the enterprise level that would be required. So we segment the market and basically have various different WorldPay products that we work with, either direct or through the various aggregators that sit within the WorldPay pipe. So you effectively get everything that you want from WorldPay, but obviously you've got this external team that's doing most of that work for you, and you're just having to sort of plug in this way component. We sort of learn what the company's doing. We'll go through this entire process and then sort of recommend the best angle in to WorldPay. Maybe you start with the little widget onboarding type rail, and then you spend 6 months on it. You learn how much volume and data you've actually got. A lot of these exchanges don't actually realize just how much volume they would actually be putting through. A lot of them get very surprised when we tell them what the potential is. And so you get 6 months worth of data, and then you start to look at it and go like, okay, well, I'm clearly the right type of customer for a direct or well pay, and then we'll move them over to a direct.
Got it. Okay, so so Emma, you're with a client, and what advice would you give them about how to grow their business and how to best practices of incorporating global payments into their business model? And I'll have, this is the final question, then we'll open it up for Q&A from everyone here.
So from a card perspective, it would be looking at what is needed per market. So I touched on earlier the security features. So the three main ones we look at are CV2, ABS, and 3DS. Now, attitudes towards these can be different in different sort of issuing countries. So we'll look at the attitudes towards each of those, but it might also be looking beyond cards and can you offer alternative payment methods which are popular in those countries, or are you making sure that you offer the local currency to the cardholder if that's the best user experience, and in terms of acceptance, currency can have an impact on acceptance as well. So I suppose it's given the cardholder the option and given them the advice on how to process in each of these markets, which can be very different.
Very cool. Rest of you guys, anything else to add to that?
I mean, I think Emma nailed it. You know, there's a lot of different variables that, you know, a person or a merchant might not see. That's just tiny little tweaks to what they're doing, and all of a sudden they've got way more uptick than they expected. Sometimes it's something more egregious, and you find a really big problem, and it's our job to work and vet out what that could be. But normally there's always a solution and a way for us to improve performance for these guys. So, you know, again, it's back to your point, Mark. It really is a lot of consultative services. It's what you get. And, you know, I think exchanges have to look at what they're getting for their money when they go out there to offer cards as a potential on-ramp for their digital products.
Yeah, so I guess to summarize, international payments, don't try this at home.
Exactly.
Try
it.
at home and
try it at home, but have some help.
Have some help. Know what markets you're going after. You know, we have 126 currencies that we can enable merchants to sell in around the globe. And, you know, we also have 320 local payment methods that you can choose from, that, you know, they're going to be specific to market, but also for the vertical market. You know, only a subset of those are going to be a good fit for crypto. But the biggest, like, you know, more than the local, using a local payment method, in terms of penetrating that local market, it's selling in the local currency, right? So people don't have to get out a calculator and start to do math in order to know how much of their Bitcoin or their ETH or their Clay or HBAR is going to cost them. Have it presented to them in a way on their terms, so they can make an easy decision.
And then there's no surprises when they pull out their bank statement, which is probably the #1 complaint that you see online about a lot of the Cabreros. They're very surprised by the extra 5-6% that suddenly turned up.
Yeah, good call out, Dewey. Yeah, if you're transacting in a currency other than the currency that's native to your card, your bank will charge you foreign exchange fees in the neighborhood of 3 to 5%. And so, if you want a much softer experience, you know, retail experience as an exchange, you want to offer the currency that's native to that particular user's card, because then the exact amount that they are being charged will show up on their cardholder statement, and there will be no additional charges for cross-border foreign exchange fees.
Okay, great. Well, it looks like we have our first question from Mr. Funding Jim, who is a payments guru. So I'm sure he's got a lot to ask. So Mr. Funding Jim, go ahead. What's your question?
Greetings, everyone. So I enjoyed this conversation between the host, co-hosts, and I'm just becoming familiar with some of you. Myself, I relocated to Puerto Rico after running an accelerator in the Silicon Valley for about 5 years, as far as hosting people that were from all over the world coming to make their pitch for VC and so forth. And what they kept running into, similar to this conversation, was the credit system, the leverage system, the FICO. What does that mean? How can I get an office space? How can I get an apartment? The things that they address before they get a runway to build out their app or whatever their tech might be. So I've dealt with this kind of challenge for about 5 or 6 years, maybe 6 years now. And then crypto came into my life. And my crypto came into my life in 2017. So I don't have the depth that many people here already have as far as understanding crypto and kind of the morphing of the narrative over the past 10 or so years. Over the past 2 years, I've become a lot more familiar because of living in Puerto Rico, being around some of the people that moved to the island for Act 2022. I'm an Act 22 and 20 person as well. And so I'm familiar with some of the banking challenges. I'm familiar with some of the credit buying out of the future with your good name today, saying that you're going to repay a success or a loss of buying a crypto, right? So much of the chargeback challenge, if it's something like $200, $400, you probably won't get that much pushback. But if you have, because it's a consumer credit card, the trended data about your profile as an individual living in the United States, having whatever kind of credit profile that you have, you're probably not going to blow your access to a $20,000 card because you bought $200 worth of crypto, right? However, you are going to have problems when you start to go outside of the trend. And I think Emma commented about that earlier. So the reason that you would get pushed back or denied or declined, like the poll was saying, was that out of the blue, you're going to plan your financial future for the next 30 years by buying some crypto, maybe $5,000 at a time. Of course, that's going to set off all kinds of alarms, and you're probably going to at least get denied on that. So the grassroots people of crypto, especially in the DeFi space right now, they're very much looking at all of the ways that are onboarding into maybe one version of a crypto, but then typically into a stable coin. So I'm seeing people that are not, and I'm talking millions of dollars worth of transactions a day. I'm seeing people that are not necessarily looking at buying out of the future with a credit card or leverage position or their KYC, US citizen restrictions that we're familiar with. They're looking at onboarding through paying their dentist, paying for a car, things like that with crypto, but then also teaching that person that just accepted that crypto how to off ramp into USDC.
Okay, so can we just get to the question here so we can have these guys answer, because we're kind of tight on time. What's the core question?
The question I keep hearing is this going to be a movement toward corporatization and decisions, or is it still going to be about how things are actually coming on board from the individual person? Because I see people are going into exchanges and they are suddenly be thrown into a casino kind of financial planning instead of saying, I need to sit down with a financial planner. I hear about consulting, and I would like to hear of consulting for an individual, not necessarily for businesses or corporations. So I'm seeing a bifurcation as far as the attraction of crypto. Can Emma maybe comment on that? Is it typically individuals? Is it companies that are looking at credit card or fiat payment systems? Because I know many that work in high volume.
I'm
Emma?
not sure on that one. Yeah, I typically obviously look at just the card payments from the consumer. Yeah, I don't know if Che or Mike has got anything.
I could
Or
throw
Dwight.
something.
Yeah,
Yeah, sure. So, just to throw something that my business partner likes to say is, like, right now we're in a transition phase from analog to digital. So, as you move through this phase, you have to have these sort of temporary components during that transition. And, you know, to Micah's point before, you know, it's a two-sided market. So yes, you might have someone with crypto, but the person that's got the car for sale, they probably at this point in time don't want to be accepting Bitcoin. Highly unlikely they'll accept a stable coin, because obviously it's still a very nascent market. They may not even know what that is, or then, you know, how they can turn that into whatever they need to do to pay for the rent and salary. What I find very, very interesting is what a lot of the central banks are starting to do around the CDBC. So central. Once we see these things push into the market, then I think you'll see a full move towards the digital phase of this transition that we're looking at. I'm not sure if that answers your question. So at this point in time, you have companies that are building technology on top. As Micah talked about before, you've got someone who has a card that's issued, it's got some Bitcoin in the back of it. They walk in, go buy, you know, Ford F-150 truck. Like at that point, there is a whole bunch of infrastructure in the back end that's going to, in real time, take a bunch of Bitcoin, sell it into US dollars, and make sure that that car salesperson gets money in USD. That's the state that we're in as we move through this phase. Whether or not you see that merchant want to start accepting things like USDC is unclear at the moment. At some point in the future, once you actually have full central bank dollars, obviously then you would have full acceptance from the merchant side of the market.
Well, for the small retail consumer or buyer, I see things like Monarch Pay or Monarch Wallet, which has the same broker-dealer licensure, the same money transmitted licensure across 50 states for US residents at least, as Coinbase. So you can utilize Coinbase if you're an institution, or if you're an individual, if you go through KYC, and then you can suddenly take your $5 onboarding, you know, to get introduced to a kind of teaser, a trade. But there's faster ways and more direct ways that comment earlier was saying about how would someone in a bar basically speculate, you know, $200 or whatever, versus how would someone from trying to do wealth planning say, I need to put 1% of my net wealth into a stable crypto, whatever that means. So what I'm saying is the roadblock isn't necessarily the exchanges and the credit card companies. It is the individual kind of saying, is this a grass movement? Is this a replacement for currency? Or is this a leverage of speculation? Is it the same as buying Tesla stock or Amazon stock? How do people view a purchase? Is it a lottery ticket, or is it a 10-year plan for their wealth to increase?
Most of the purchases of crypto today by card are for speculative purposes.
Right.
But also it's important to note that when you're, you know, as I mentioned earlier, when you're making a purchase with a card, the average consumer is making a purchase of less than $200. So I don't think it's something, unless, you know, there are brokerages or financial advisors out there that get that granular for a customer that's concerned about a $200 investment. I doubt it. Really, I think what we're trying to do here and do it right is to create that user adoption so we could find out what's going to come from that, right? Is it going to be these new products that Dwight's talking about? Is it going to be something different? We don't know, but what we do know is if you want to get into the space and play around, it is very, very hard to do without jumping through a bunch of hoops. And the easier we can make that experience for a customer so that they can explore, then, you know, the quicker we're going to see that adoption, right? Especially during times when, like now, when you start to see the market be a little more volatile, you know, you start getting people talking about crypto again. But, you know, there's not really a person that, you know, that says, hey, I'm going to do a $25,000 investment and I'm pulling out my Chase Visa card, right? It's just really getting those consumers, those retail consumers to just adopt the technology. And that's what we're trying to facilitate.
So I've bought a $4 million property with crypto. And the way that I've done it before has been basically through like a True USD, as an example. So you would put it into the escrow, and then you would have basically you put tokens in, and there would be an escrow account, just like a conventional real estate property. So there's ways to do big volume, and then there's ways to do little smaller volume as far as the speculator under $200 person. But yeah, it seems like we try to put a round peg into a square hole kind of situation when it comes to legacy finance and legacy products versus this idea of what's crypto may have been, what it's transmorphing into. And so we're just a little confused. Thanks, though.
Yeah, and there's an interesting point someone else raised, which is like, hey, Visa, MasterCard don't want to give up their 2 to 3%, tax, if you will, or fee on transactions when, why couldn't you just, why couldn't they just become miners or validators or something like that, where they played a different role, but they didn't take that same fee for every transaction. Do you all run into those sorts of conversations with exchanges or large issuers who are like, hey, we don't want to absorb the fee, or we're going to charge a fee in addition to the customer? How does that whole topic get broached with the crypto people and as it relates to these legacy credit card issuers?
It's definitely a bit of a problem because in the traditional e-commerce space, those fees are still there. It's just baked into the margin of the product that you're purchasing. Whereas because you're exchanging cash, cash for like a new digital currency, obviously you can't bake the margin into the product. And so obviously the fee has to be pulled out and exposed.
Yeah, I mean, when exchanges talk to us, a lot of the ideas they have, about their growth they sound really good. But the problem is, again, it still goes back to adoption. If you want to be a purist, it's going to take a long time to get that growth onto your platform because it's hard to, someone's got to buy crypto from another exchange and then move it over there so that they can trade crypto to crypto or something, because an exchange doesn't want to work with traditional fiat products. But right now, everyone probably has in their wallet or purse a credit or debit card. So sometimes you've got to take the good with the bad. And yes, there is this new technology out there and a new way people are going to be transacting in the future. But if no one knows how to do it now, then, what's the point? You really need that adoption. So you make it as easy as you can. And usually that is by being able to pull out a piece of plastic and type your numbers like you do for any other purchase online if you're not using crypto, right? And that to me is what's going to drive this industry. You've got to marry the old with the new right now and do it in a good way and an efficient way so that, that adoption continues to grow.
And, will there be blockchain-based, card brands, so to speak, that are new entrants and step in and pull market share from Visa and MasterCard? Yes, 100% that's going to happen. They're going to have to figure out how to get the value proposition right to the user. Also, they're going to have to figure out how to get the value proposition right to the merchant, right, who's accepting the payment. Now, one thing we haven't talked about that is tremendously complex is the integration into the point of sale systems in retail environments and also in the e-commerce environments to be able to accept these new forms of payment. And that is nothing short of a monumental challenge to be able to get that pushed out and to achieve ubiquity of, where generally acceptance is available. You've got Visa, everywhere you want to be. When are we going to be able to get and say that honestly with the blockchain-based, payment method that doesn't exist? That's a longer, 5-10 year horizon before we start seeing something like that. I mean, look at how big PayPal is, and it's only in recent years that you're starting to see you have the ability to pay for a restaurant tab or perhaps in a retail environment to pay PayPal, and PayPal is a great, big, massive organization with $100 billion on it.
Yeah, I'd just add as well. I mean, obviously, I think they know that probably look any further than the fact that MasterCard's one of the biggest blockchain payment holders in the world to know that they're trying to reposition.
You're breaking up, Dewey.
I was just saying that all you have to do is look at the fact that MasterCard is one of the biggest blockchain holders in the world to know that they're positioning themselves for the new world.
Okay. Very good. 1 second here. Let's see if we can't launch a poll. Okay. Are there any other questions that anyone would like to ask?
Scott
Okay.
Keel, do you have a question for us? Put you on the spot.
Okay, so let me just ask, for some reason I'm having a tough time, the poll's not launching, but you know, we sometimes do things where, okay, here we go. Yes, we just launched it. So if you all, if anyone's interested, we in the past have done kind of breakout rooms where we have kind of more intimate time where you can meet your other Crypto Mondays attendees and kind of spend some time in networking and that sort of stuff. If you're interested, just let us know in the poll. We just launched it. And then we can continue for a couple more, you know, for maybe 10 more minutes in kind of a more intimate environment. You can meet your other attendees if you're interested. So if you are, let us know, and then we can set those up and you guys can spend some more time hanging out there. What is the, you know, Micah and Shay, what do you see in the year ahead? What are the big changes that are going to happen in the payments market that is going to make adoption kind of hockey stick and get more, you know, drive more interest and, you know, lubricate the way forward, so to speak?
Well, first of all, I'd say, you know, if we watch the government continue to print money to fund, you know, stimulus packages and what have you, you're probably going to be driving more adoption in the short term here. Long term, you know, again, crypto was built for events like we're dealing with now, and I think it's opening up a lot of people's eyes. I also think that because there's a lot of discussion in mainstream media that gets trickled down, you know, you do have your aunt or uncle or grandma who comes to you and starts asking about Bitcoin or something. I think that what you're going to see is a lot of these exchanges get a lot more intelligent on how they drive this adoption. So you're going to see a lot more exchanges working to be like the Amazons or the Netflix or the Ubers out there, where they make it really seamless for you to come on board, to make purchases, and to have this really pleasant sort of frictionless experience. And I think if you get more adoption that way, we're going to see a lot of these other type of tangential industries around blockchain and digital currencies start to pop up and drive a lot more usage that way. And I think at that point, you know, a lot of the old hands like the Visas and MasterCards will eventually, you know, have to really adopt and be open-minded about this. So, you know, they'll come to work with someone like, you know, us at WorldPay, because they will start to seek that advice, given, you know, once that adoption's really at a much better place than it is now.
And I think, you know, in the next 12 months, what you'll see is, the top 5, top 10 crypto exchanges, you will see them providing direct acquiring services. you know, that's a big deviation from 12 months ago, because they are cognizant that they need to have a good user consumer experience if they want to get the high profit transactions from those retail users. And so there's going to be just an all-out war among the big players to capture that retail market. And then there's been substantial growth in the numbers of these fiat on-ramp organizations that we're supporting and we use to service the small and mid-sized market, because we just don't have the bandwidth to service those directly. So I think you're going to see, the MoonPays, the Wires, the Prime Trust, the Banksas, more prevalent in a large number of exchanges in the small and mid market. And there are also a large number of new entrants into that space. So it'll be interesting to see, 12 months from now, who the big winners are there. Got my own personal opinions, but and also I think there will be some consolidation in that space because you don't need 50 of those fiat on-ramps. You need a half dozen. Dewey, what are your thoughts? You're
no,
one of the visionaries in the industry.
Complete agreement. I mean, we've been working with you guys for almost 2 years now. And you can definitely see that at the very start, it was, as Che had said before, it's just like, oh, we just want something simple that we can plug in. And I think throughout the past 18 months, 2 years, they've realized that they need to step up their game and offer a better product. And a lot of those people that we've been talking throughout that time have sort of come back to the table and said, hey, yeah, all that stuff you were talking about, you were right. It is time for us to put in educated, and so I definitely see that that's the kind of phase that we're in over probably the next few years, where we'll see, much better user experiences from this type of stuff. It's very, very exciting. You're on mute, Mark, I think.
Yeah, Mark, you're on mute.
Hey guys, I just want to say I'm really grateful for your generosity in sharing your knowledge and insights and input. And I'm especially grateful to you, Emma, for being up all night long. It's been great. And so we've included, Micah was kind enough to